Canadian real estate is showing absolute signs of insanity once again as Fomo takes over the spring real estate market. Yes, the Canadian real estate market has shifted into high gear, with housing prices now $103,000 higher than they were in January, just 5 months ago. And of course, these gains are being led by outpaced growth in the Vancouver and the Toronto markets, which has kind of been the story of what's been going on the last couple of years. And in this video, I'm going to talk about the stats. I'm going to talk about what the average sale price looks like if you take the two big markets out of it. And I'm going to talk about certain suggestions that are being made by economists and CMHC and what they probably don't want to see happen in the next little while. And then at the very end, I'm going to talk about what you can do to protect yourself from making bad decisions in a market that is really, just really quite frothy. Is frothy the right word for that? I don't know. Let's go back to insanity. I like the word insanity. But before I get into the details, my name is Nolan Mathias, and if you want to thrive financially, this is the place for you. So do me a favor, hit that subscribe button so more people like you can see this video. It really helps me with the YouTube algorithm. Oh, and that little book back on the shelf there, Mortgage Secrets, if you want to get your copy, you can still get it for free by going to mortgagesecrets.ca. All you have to do is pay the shipping and handling. I'm actually going to give away the entirety of the rest of the first print run, which will technically, if you consider that you guys all paid shipping and handling for it, make it a national bestseller in Canada. But without further ado, let's jump into what's going on in the Canadian real estate market, because this is, like I said, quite, well, insane. Never has there been a 25% drop in real estate prices until this last year in a single 12-month period. And now all of a sudden, we're seeing the market go absolutely wild again as buyers flock back in. Now, at the same time, inventories are lower than they have been in 20 years, which is absolutely wild. And the numbers for April were really interesting because according to the Canadian Real Estate Association, national home sales surged by 11.3% month over month. So in other words, there was 11.3% more sales in April than there were in March. Now, that being said, the sales activity relative to last year is down 19.5%, but that increase in sales over the previous month can't be ignored. Because at the same time, new listings are just not coming up at the rate that they typically would, especially compared to the amount of buyers out there. And while there's 3 months of supply right now, which typically indicates a balanced market, it's trending towards a seller's market once again. And as you can see from the chart here, monthly home sales are once again coming up close to that 10-year moving average. And my guess is by the fall, we're going to see those sales at that 10-year moving average unless something happens that prevents the real estate market from continuing to go up. And I'll talk about that a little bit in a second because there's some things that certain economists are saying that could have a major impact on where the Canadian real estate market goes. And I want to show you this graph real quick because this is the residential price graph and the dates don't really matter down here, but what does matter is this. We're starting to see the average house price bump back up as well as the HPI aggregate composite, as well as the benchmark price increase as well. And when the average price moves significantly more than the benchmark price, what this tells us is that we're seeing a lot happening in some of the bigger real estate markets. And while housing prices in Canada are definitely up, they're up $103,000 from January of this year. If you were to take Toronto and Vancouver out, the average home price in Canada drops by $144,000. It goes from $716,000 to $544,000. Now, why is that important? Well, the reason why that is important is because buying a $544,000 home for most Canadians is still pretty reasonable. Now, I get why a lot of people are hoping for a market crash because they're hoping that the $1 million homes in Vancouver and Toronto are going to get cheaper. But for the majority of Canada, average income can buy an average home. Okay, but hold on just a second here. Before we just assume that interest rates are at the top, before we assume that the market's going to continue to go up, let's talk about what would happen and what could happen that would see the market turn the other way, both from the perspective of interest rates and from the perspective of what's happening in the Canadian real estate market. And that is largely to do with the job scenario. Because right now, you do have a lot of people who are going to be renewing into higher interest rates. You have a lot of people who have mortgages with variable rates that have fixed payments that are negative amortizing. And for the most part, those people are being allowed to continue to make their payments, mostly from lenders providing assistance and extended amortizations. Now, insolvencies seem to be going up in Canada. It seems to be happening with credit cards and car loans and things like that first. But the big thing that could have a major impact on the Canadian real estate market and see it fall further than it already has is if the job scenarios changed and if we found ourselves in a situation where a lot of people were no longer working. because then longer amortizations and financial patches that have been allowing people to continue to make their payments would start to become irrelevant because you can't draw water from a stone. If people don't have an income, that's going to be the thing that causes them to default on their mortgages and ultimately could cause the fire sales that lead to significantly lower real estate prices. So I'm not going to be the person who goes out there and says, absolutely, real estate prices have found the bottom. They're going to continue to go up, because there's still a lot to be done with respect to inflation, which could mean higher interest rates, and higher interest rates could ultimately lead to more unemployment. Because that's ultimately, if they want inflation to come down fast, what they have to do is they have to create more unemployment, less income being used to purchase goods. And that's the real fear for the Canadian real estate market. So if you start to see those employment numbers turn, and if they turn drastically, that's when you need to start worrying about real estate falling and the craziness that's happening right now coming to an end. But that doesn't change the fact that the increase in real estate activity is something that we need to monitor. Because here's the problem. One of the biggest things that led to inflation over the last couple of years, aside from ships getting caught in the Suez Canal and China having a zero COVID policy that created massive supply chain issues, well, the biggest issue was the fact that Canadian real estate went up so much in value. And if it continues to go up and it continues to be a driver of the economy again, well, that could lead to higher interest rates. In fact, when we have some economists who are predicting that there's going to be rate cuts, we have others like the economists from Bank of Montreal who are now suggesting that further tightening might be necessary if Canadian real estate continues at this pace. Now, it's been suggested by some that in order to relieve the payment issues that are happening for people, that CMHC should increase amortizations once again from 25 years, maybe up to 30 or 35. And they're saying no, absolutely not. We cannot do that, because if we do, it could increase activity in the Canadian real estate market and lead to more higher prices, which would have obviously a devastating effect if housing prices were to continue to go up even further. Now, on top of all this, we saw 1 million people come to Canada last year, which is probably a lot of the reason why the Canadian real estate market is being supported, but we are starting to see immigration numbers come down. In fact, immigration has started to reduce substantially. And the reason why? Well, people are starting to get the message that it's too expensive to live in Canada. So the question is, if immigrants from other countries are looking at this and going, whoa, it's way too expensive to live there, and Canadian housing prices are going up substantially once again, what do you do as a Canadian with respect to making home buying decisions? Well, first and foremost, with respect to interest rates, don't assume that this is the top for interest rates, because this could still go either way. But if you're going to buy a home, make sure you make the best decision for you based on your risk tolerance. And by the way, with respect to risk tolerance, fixed rates are so much lower right now than variables anyways that it makes the choice easy. And I'll give you the same advice now that I gave everybody pre-pandemic, that I gave everybody during the pandemic, and that's to choose the lowest rate option that you feel comfortable with at the time that you choose the mortgage. Now, if a variable rate mortgage is going to bother you, never choose a variable rate. I've said that all along. But in most cases, if you choose the rate, the mortgage with the lowest rate at the time that you get the mortgage, you will benefit the most statistically speaking. Just make sure you don't choose a mortgage that's a discount mortgage or a mortgage with a high fixed rate penalty, which I talk about in my book, Mortgage Secrets. You can learn all about that there, because you want to make sure that you have some flexibility when it comes time to make changes to your mortgage or if interest rates do go down. Now, on top of that, the best time to purchase a property is the time where you know with reasonable certainty that you will be able to afford it for the long term. You want to be making 5, 10, 15-year buying decisions and know that you may have to hold on to that property if the market goes down. Now, that being said, we've never seen a 25% decline in housing prices in a single year. This is the biggest single drop in Canadian real estate history. So you have to think we're probably near the end of it. We might not be, but that would be kind of my guess. So if you're looking to get into the market, I definitely wouldn't be waiting for housing prices to drop, because they may very well not do that. But that being said, I also would do everything I possibly could to make sure that I avoid bidding wars. Don't jump into the market just because there's FOMO out there and everybody else is buying, because bidding wars are ultimately the things that end up costing people a ton of money and create a ton of risk. And I said this throughout the pandemic when things were happening in the Canadian real estate market that were absolutely insane. I'm like, just wait till fall, just wait a little bit longer and you'll probably be okay. And for the most part, the people who waited until fall or waited until the hysterics in the market went away fared a lot better than those who bought at the top or when things just seemed like they were going to get more expensive forever. So know this, that even in times where there are bidding wars, Bidding war type markets don't last forever. In fact, they typically don't last longer than 3 to 6 months. Now, if you absolutely have to move, fine, do what you have to do, but don't find yourself in a situation where you put yourself into a needs market based on your wants and end up getting into bidding wars that end up costing you a pretty substantial amount of money, especially over the long term. So in other words, only participate in markets that have bidding wars if you need to, not just because you want a different house. Oh, and if you want to know more about the Canadian real estate sentiment and some of the surveys that were done, make sure that you check out this video right here.